Good afternoon, everybody, and welcome to this edition of our ASX live market analysis. It's Feb 21. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets Australia, and it's a pleasure to be joining with you as we delve into your ASX portfolios, try and find some winners, turf out the ones that aren't looking good anymore, and identify some new ones. Over to you. Pretty simple stuff. Get onto your chat window there if you're in Zoom, or you can use the question window if you're streaming on YouTube. Somewhere over here, I've got the window going where I can see your questions, and on the various other streaming platforms as well. Other than that, let's head over to the charts. I've got one that's already come in via the Twitter, in fact, from Hoozle Finance. So give them a follow if you're on Twitter. And they've asked about Microba Life Sciences. Not a company I'm all that familiar with, but to be honest, I don't really fuss myself with what a company's doing. That's an admission. I'm quite happy to buy something without knowing what it's doing at all. And I know a few people probably screaming at the screen, say, Carl, how dare you buy something without knowing what it does? How dare you? Because, it's just totally irresponsible. And just between you and me, I've been investing in shares for about 30 years now. So I just figured out how old I am, and I bought my first share when I was 16. And in those 30 years of investing, I can honestly say the less I know about a company, the better the investment in that company goes. I can honestly say the more I know about that company, the worse the investment goes. Maybe you can relate to that, maybe you can't. Anyway, let's go over Microba Life Sciences. I will give you a technical, and then we'll have a look at the valuation as well. We have, as I like to do, look at my trends first. A short-term uptrend. I don't have a long-term uptrend because it just hasn't been around long enough. This company obviously listed, IPO'd. IPO stands for initial public offering. Back in, looks like April last year. And I need... that'll depend on how I wrote the formula. But of course, now I know what it is. I need, you can see here, my EMAs. So if we don't have 233 periods to calculate the 233 period EMA, how can we display it on screen? And similarly for 144, but we certainly have the 21 and 34 EMAs, which we can see. So that trend is up. And the other thing, it's not just about what is the direction of the trend. I want to look for evidence that the trend is supporting price if we're in an uptrend. So we've got dynamic support here. That's a tick. Because you can see on the way down, we can see that short-term trend offers dynamic resistance. Okay. Next thing I want to do is obviously find trends on my trend ribbons, but then look for price action. And for that, I use my drawing tool, and I know there's one of these on the Think Trader web app and probably on the platform that you're using. And we go through, we draw in peaks and troughs. How do you know which one's a peak and which one's a trough? That would probably take me a whole other session to define that, but I know William knows because he's done many workshops with me in the past, so he knows exactly how to do it. Maybe we'll do one specifically on just learning TA and not analysing companies in the not too distant future. This actually goes down here. We can 100% draw that one. And I'm looking for high peaks and high troughs here, so obviously something that looks like this is good for a long trade. Something which looks like this is not good for a long trade. Long means you want the stock to go up. Short means you want it to go down. So obviously second scenario, great for short trading. First scenario, great for long trading. The other thing I like to see in terms of price action like this is very good here. So this is what we call excellent price action. What I don't want to see is price action that looks more like this. So very overlappy, because there's just less certainty in the market. It's just traders, the supply and the demand side just aren't as convinced, okay, when we're doing this. When we're doing this, we've just got almost a unanimous agreement in the market that this thing is awesome. And that's really all I'm looking at in the chart, is how does supply relate to demand? Supply of people selling the shares in this company, and you're only going to sell shares in the company if you don't think it's the best place to have your money. And people with cash trying to get in, and you're only going to throw that cash at the company if you do think it's the best place to be in. So if supply's backing away, demand's coming in, we're going to get this sort of price action. The price action here is a bit skew-if because there's not a lot of data, and I'm guessing not the most liquid company at all. And looking down at the volume here, I can see not the most liquid. On some days, we only trade 120,000 shares, only 9,000 shares on that day, and so on and so forth. Okay, so that's a red flag for me. A company that trades as little as this one does, it could be very difficult for me to get in and out without moving the price too much. So that's very important as well. So that's a bit of a red flag. Apart from that, the price action is okay in terms of, well, this peak took out this major peak here. And in terms of peaks, we're talking about points of supply. And this is a point of supply. So technically that one's beating that one. So that's fine. The troughs, this trough is formed. We look at the point of demand here and the last point of demand. So they're rising. So that's okay. I'm pretty happy with that. Then I go to candles. So the candles are the final flourish. The fingerprints of demand and supply, as I call them. And I want to see plenty of white candles. I want to see plenty of lower shadows. Over the last few weeks, not seeing a lot of that. It is pulling back reaction from this move. Again, very illiquid, so we're not going to get the prettiest candles. But I can't see anything so sinister in this to suggest that you can't continue to hold it if you have it. These previous points of supply in here, very clearly now acting as demand, or at least we've got some indication of that. So I'm going to give this one, if I had to give it a score out of 10, I think it's a pretty comfortable 6 out of 10. Maybe I could go 6.5 out of 10. But clearly it's not going to be enough to get me in. What would get me in? Well, it's not that far away. Just give me some nice candles. So if I see some candles that look like this, you know the ones I'm going to draw because you've seen me draw them a million times. And that's no exaggeration because it's literally a million times I've drawn them. Here we go. That's one of them there. And then it's Buddy. It's demand side Buddy, that one there. So if I saw those candles coming in here, I would be happy to do this plus 1/3 if it was the best thing I could find on the day. And because of some of these other factors, I doubt it's going to be the best thing I can see in any one day. But hey, look, Husel Finance, who asked this question, probably holding it. They probably want a view on whether they're better off buying, holding, or selling. Hopefully, I've given them some indication as to it's not terrible, but probably not the best thing we're going to find today. Certainly, the market doesn't hate this one, but it's not falling over itself to buy it. I think that's pretty evident from the chart. Let us head over to the valuation now, and I'm going to be an absolute maniac at changing screens today. I'm not going to make a single mistake. What we're looking at here is our Refinitiv Icon spreadsheet, which comes from Thomson Reuters and me. So Thomson Reuters is the global financial information juggernaut, and they provide pretty much everything except for the bits down here in the valuation. That's my own intellectual property. Now, what they do is they aggregate for me what the brokers are saying about the particular company. Because much like, in my opinion, I don't need to know what the company does per se. I need to know what everybody else thinks of the company. That is supply and demand. I'm happy to ride the coattails of supply and demand. I don't need to do a lot of analysis on the valuation of the company because there are brokers out there doing that analysis, and who am I to say I'm better at doing it than them? I'm probably not. We don't have a lot of coverage for Microba. That's not a surprise because before Husel Finance suggested it to me, I had no idea what it was. Number of estimates 2. We've got a price target here at 60 and 41. I'd say they're the two estimates, and then we've got a mean price target of 50. That's just the average of the two rounded. We've got one strong buy and one buy. When you have these small companies that are covered probably by smaller brokers, they tend to be fairly bullish on them. Otherwise, why would they cover them? Now, that's about as far as I can go on my spreadsheet, because without earnings per share or net income, without a profit, there's not a lot of valuation I can do on it. But we can look at some trends here, so we can see they did lose 5.1 cents per share in 2022 financial year ending in June. And this year, which we're just over halfway through, they're expected to lose 5.3 cents per share. That's going to fall and fall again over the next few years. And maybe somewhere down the track, judging by that run rate, FY27, FY28, they could indeed be making a profit. There's not a lot else I can do for that for you there, Husel Finance, apart from just give you the info, and we will keep moving along. So as is the format of today's session, my hope is to answer as many questions as possible from you lot. And I just will have a look over this side after this one, because I've got some YouTube streamers in here, Josh and Ira. I'll get to yours next and next again. This one's for William. I think that looks very, very good, William. I obviously today's not a great day in terms it's pulled back a little bit, and I'm guessing, William, that they've reported their earnings today because so many companies are reporting around about now. And maybe there was a little bit of a miss on those earnings, but once investors had a good look through the numbers, they're actually not so bad. They're starting to like what they're seeing. Now, having said that, we must be aware that we are looking at this last candle as an intraday snapshot. So right here, that candle is not closed. I know it's on screen. I do get intraday snapshots from my data provider each hour on the hour at 20 past the hour. And that all of a sudden changed. Why did it all of a sudden change? Because I just clicked the update button and the new data has come through. So we can actually see it's gotten a little bit better. So everything we're going to talk about today, if I say, hey, this last candle is so important, it is, but you need to wait to the end of the trading session to make your final decision on that. So if I say this candle looks amazing, if it closes here, it's a buy. Okay, make sure you come back to that candle at the end of the day because it could be completely different and therefore not be a buy. I think this is very encouraging, William, that last candle, the fact that, whatever the news was, initial reaction not so great, but people realizing actually it's not so bad at all. The only thing I would say, and hopefully your eye was drawn to it as well, is there's a little bit of an issue around here. I think I covered this not that long ago on the call on Ausbiz, didn't I? I said, look, 130, it can easily get to 130, but then it's going to struggle up there. And lo and behold, it's not that far away. But I don't think you need to jump out at this stage. That's the message. This is all very, very good. What a great short-term uptrend. Moving averages, moving beautifully there. And the long-term trend has turned up as well. So it's not just shorter-term traders. I mean, that light green zone, that's what the shorter-term traders are doing. The dark green zone, that's what the longer-term investors are doing, okay? The big funds. So they're starting to jump back on board. I'm pretty happy with it. The other thing there with the price action is, look, it's very good. It could be a little bit better, only a little bit, because we've got a little bit of an overlap going through some of these peaks and troughs. So if I was to draw them, I'd be drawing something like this. Again, my eye is trained to do this, and there are very specific rules around where the peaks and troughs are, and that's where they are. So actually, no, that's fine. Price action's fine. And then finishing with the candles. I think the candles are very good. Lots of white candles, lots of lower shadows. So if I had to give this one a score out of 10, I'd go 8 out of 10. And the only reason why it's -2 here is because of the MPOS that is so close by. And what that does is it reduces our potential reward to risk. But this is on a really just a temporary basis, and I'll explain what that means in a second. So what's our reward? Well, if we look up, as we always should do, and find where our last major point of supply is, MPOS, and not everybody's going to want to sell around 132, okay? But some people will, and you'll say, hey, Carl, why do you think that? I mean, it's just a level, it's just a candlestick in the past. Why do you expect? Not just, think, but totally expect there will be supply there. Well, you have to imagine that on the way up, everybody's loving G8 education. They think it's wonderful. They think it's brilliant. They think it's the best thing ever. And then they say, don't worry. Just they pull back. Nothing to see here. It's fine. And then they go, oops, maybe not as good as I thought. Okay, it's okay. Right, it's going back up. It's going back up. Finally. And then they go, right about here, they go, I knew I should have gotten out. What was I thinking? And then they're going, this thing is never going up again. Right. But if it does, I tell you where I'm going to get it. I tell you, if this thing gets back to, because right here, think about what this represents. This price here represents, that is the exact price. That is the exact price I knew I should have gotten out. Right? I knew it. I knew when it was there, I should have gotten out. If it ever gets back to there again, I'm out of here. Right? Not this little black duck. That's not going to happen to me again. Right? I'm out of here. And what that creates is what I like to describe as latent supply in the system. Not everybody's going to feel like that, but there will be a degree of the supply base that will want to get out there and create supply. So in terms of where I think, your upside is in the near term, it's probably that much. And if you're trying to set a stop loss, it probably, you want to get it beneath some demand points, some historical demand points to be safe, which means your risk is, that much. And I can't make it work from a risk reward perspective. So one thing is to understand the strength of a setup using all of this, really a checkbox system, isn't it? I'm the same. And the consistency is so important. You just to go through the same checkbox each time. But then saying, well, I can compare different setups now. I can say this setup is better than this setup. One, because it's more of a trend play than a turnaround play. We'll talk about those, I'm sure, as we go. But in terms of reward to risk, this one's just got better reward to risk. Now, I say temporary, and this is the important thing you need to take away from this discussion, because the future is not written. There's still plenty of future to go. Let's hope so. So once we get above, and I'm just going to keep drawing here. Hey, there's not enough stuff on this chart. Just keep drawing. Once we get above this level, right? Let's say now we are here at X marks the spot, right? X marks the spot. We're above that high. When we look up, we've got a completely different reward to risk schedule now. And I'd have to go back to the weekly chart to see where the next one is, but you're kind of hopefully getting the picture that the next one will be where it is. And let's just, for argument's sake, say it's there. Okay, there might be more. I know there might be more. I just want to do this quickly because I can show you, let's say it was there. Let's say we did all the research and that's exactly where it was, because what I can do now is I can look up and I say, well, if there isn't going to be any expected supply until we get to that point now, that's the new level, well, my reward to risk has completely changed. So my reward now is potentially this big, and my risk, maybe it's still that big. I don't know. Maybe it's changed because we've gone a little bit higher and we've got more demand points. Now my reward to risk is better. And this is why I'll happily wait for something to even go up a little bit and put in the right candles, put in the right price action, and wait to buy it at a higher level, because the reward to risk will be good or better for what is already a good setup. That's the way I meant to put those words in. Okay, so I think we've got the idea on that one. Let's head over here and change the screen. And don't worry if I take a little bit long at the start. I know I do it on purpose because I want to lay as much of the educational foundations for today's session so I can start to whiz through a little bit later, which is what I do if you're new to my sessions. G8 education, number of estimates, we've got 6 at Thomson Reuters. Highest price target 132, lowest 104 for an average of 119, which actually says or suggests that the stock price now is a bit overvalued. Okay, that's interesting. 3 strong buys though. 2 buys and 2 holds. No sells, no strong sells. That's encouraging. After I look up here and get an idea of what the brokers think about it, it does shape to some extent what I think about it. The next line I go to is the EPS line. I want to see this growing. Okay, and it wasn't growing through here. You can see it was shrinking, but this stock appears to have turned the corner. And when we look at the chart, you can see through much of that period, those years where the stock's been going down. Let me reset some of this. The price chart is reflecting largely the earnings chart. And lo and behold, what's happening now is the stock is starting to go back up again. Why is the stock going back up? Oh, you didn't see it. You didn't see it because I didn't change the screen. Let me go to weekly chart. So there's your years of earnings going up. Yep, earnings starting to shrink. And then right at the end, we can't see it, but we will now. The price trying to go back up again. Okay, why? Because when we go back to this screen, we can see the price chart is a chart of the earnings, ladies and gentlemen. Don't act so surprised. That's how the market works. It is literally how the market works. So if these earnings are expected to go back up, there's a possibility the share price could go back up. But having said that, look at that. We're tailing off in 25 and 26. These aren't my numbers. These are the broker numbers. We still get a compound annual growth rate of 14%, which compares pretty favorably to the overall market. It's roughly double. And with the average market PE of about 15, does that mean I'd pay 30? Does that mean I'd pay double the average market PE? No, because this is not exactly the most reliable stock. How do I know? Well, look at the earnings history. Clearly it's not. I'm going to change the earnings date here so we could get some valuation going. So the market is saying, this is the market's PE here. So the market's saying, we're happy to pay around 16 times, and that's a median of the future forecasts. In the past, it's probably not that dissimilar to what they've paid. So I can check that by going dynamic historical. So in the past, they've paid around 16, and the future, they're actually ratcheting that up just a little bit. Would I pay 16 times for look at that. That 14% earnings growth has disappeared because we've put the right year in. Okay, so apologies for that. I should have done that first. That, see, there you go. 14% is in there, but then when we look over the sample, which is now from, December 23 to here, that over, that many years, so 1, 2, 3 years growth, it's actually not that much now. Okay, so I should have put that in first. So 3% earnings growth does change things, but gives me the ability to explain. Would I pay 16.7 times above the market average for something that has below the market average in earnings growth? And the answer is no. So I can't find a valuation case here. And to be fair, neither can the brokers. My price target's at 120, their price target is at 119. And that is only if I go with what they are saying. But who am I to doubt that, to be fair? Who am I to doubt that? And I won't. Watch me not. Okay, let's head back here. Hopefully that satisfies your requirements there, William. I just do one each, I think, today so we can get through them all. But I will do this one because what a fantastic monster trade this has been. Hopefully some of you are on it. I think this could go down as my best stock pick ever. I did say to sell some here, though, didn't I? I said minus 1/3 here. And I might have even said minus 1/3 here. So you're probably only traveling with the last third if you hadn't followed my other teaching. So this is where I've maybe been in the media, or I've been live in session. But what you have to do, and I don't know, maybe it was here. Actually, I don't know. Go back and review the tape. I think I said, somebody will correct me if I'm wrong, and please do, but I think I said, because I don't think we had this candle, and we'll be able to tell because it was a Tuesday, so it was that day there. So go back, check the tape last Tuesday. I'm pretty sure I said there's nothing so sinister in here to exit. Now, would I have exited on that day? Yeah, probably I would have taken a third, all right? So let's say there. Now, was that the right thing to do? No, it wasn't. But at the same time, the trade's not dead, okay? So what do I always tell you? I always tell you, buy stocks in great long-term uptrends with great short-term uptrends when they pull back to my light green zone and throw in either of those candles. Okay, that's exactly what I tell you, with great price action as well, which is what this had. So at that stage, it's let's face it, close to 10 out of 10. So potentially down here, you're even adding 1/3 in. What to do with it now? You might say, Carl, what's the point of getting out a third and then getting in a third at the same price? Because you don't know the future, silly. And if you do, and you knew that was going to hit this level and go straight back up, well, you're a genius. But if you didn't know, all you saw was supply coming in and you've had a great run and you want to take some profit, no big deal. What's it do now? I can't see. Again, I'm going to reiterate what I said on this candle here, which is I can't see anything so sinister in the chart to tell me to get out. I don't know what's going to happen tomorrow, but there's nothing to tell me that today. And this candle's still live. So if we end up, William, with this candle here, okay, and it's Buddy, which will appear in a second. So this one here, and it's Best Friend. Right, these are our supply side candles. Pardon the typo there. Supply side candles. Okay, our supply buddies. And if they were to appear today, if today's candle was to form that, or over the next couple of days, then you know what to do because you've been listening to me long enough. Super interesting. I'm going to skip the valuation on Weebit in the interest of continuously moving. Let's go to S32. This one's for Craig. Look, it's close, isn't it? It's close. Let me get rid of some of this other stuff here. Let's go there. We'll have a fresh start on this one. I'm going to go zoom normal because it's very important to get back to your normal zoom, your default zoom, before you analyze the next one and the next one. Look, this one wasn't looking that bad, to be honest. And even through here with that candle, that's a really nice candle. And this is developing. So, this would have been very warm for me. The only thing that would have brought it down in terms of marks would have been the price action. So you can see how we're going pretty well through here, but then the price action just starts to slip a little and actually moves back into something that resembles, I know they're very tight, but lower peaks and lower troughs, okay? This candle here is the redeeming feature, this nice big white demand side candle. But unfortunately, I think that more than accounts for it. Okay, so whilst this one here is a positive, this one is more than that in terms of negative. So that is actually really concerning, especially after you get a candle like this, because again, I'm probably not the only person that sees this as a big demand side signal. Okay, and I can't deal in absolutes. I can't say every time you see that the price is going to go up 1,000%. I can't say that. All I can say is that is the fingerprints of demand, and more likely the price will go up. I can't see what's going to happen next. I'm guessing by that next day candle there were earnings, and we don't know what the company's going to release. So I would say this put a few traders in, or potentially back into it, and they're caught off guard now, and that's not so great. Today's candle's encouraging. Look, buy, hold, sell. Long story short, I could probably go a hold, but I do think we've got a really great level now. So I think that trough low there, I think you want to watch out for. And if I hover over it, you can look over here. It'll tell you that the low of that is 442. So you might want to give it a few cents. There is potentially going to be some demand in here as well, right? So I don't think we're panic stations yet, but I think we need to be, the right words for it, alert, not alarmed, right? About that candle. That candle bothers me. It annoys me. It frustrates me. I don't like it. So this one's unnoticed. Certainly a hold on this one. And yeah, I don't want to see it have negative interactions with this zone through here. What is a negative interaction with that zone? So those supply side candles in and around this zone would be very negative. And then we'd probably see it, because it's still a long-term uptrend, we'd probably see it pull back even into here. And then we don't know where it's going to go from there. Like, we don't know. I'm only drawing those as potential scenarios. I just don't know. Something to be alert about. Okay. Now, if that doesn't happen, I'm just giving you that scenario. I probably should have drawn them red, because I need to pick another color now to draw the up bit. Yeah, we might well be okay, and we'll just see this. We'll see a test in here, and we'll work through that demand, and we'll actually turn this broader pattern into something that is holding this short-term uptrend, and therefore there's nothing to be alarmed about. So I can't give you a definitive answer, because I just simply don't know. I think the technicals are that opaque that it would be foolish of me to say one way or the other. But I think you need to be on alert. Let us quickly have a look here for Craig at the S32 valuation, and we should have plenty of brokers covering this one. It's important. Before I start, first thing I do, get the financial year right. 16 estimates, as I thought, plenty of brokers there. 6 is the high target, 450 is the low, and the average is 508, which does allow some upside from here. So that's encouraging, Craig. 2 strong buys, 9 buys, 7 holds, no sells, no strong sells. That's also encouraging. I suspect, though, when we get to the earnings per share line, we're going to be disappointed, and we are, because we know these big mining companies are cycling a massive bump in post-COVID profits, and we're expecting the compound annual growth rate to be -5%, which isn't actually bad compared to some of those other big resources companies. So what would I pay for -5%? Well, I wouldn't pay all that much, and that's why you can see the brokers here have marked the prices down to very low PEs. Okay, so we're talking 8.7 versus the market's 15 average. So it's starting to make sense. And to the untrained eye, they go in looking for a great stock, and they think, I must have a low PE and I must have a high dividend yield. Okay, well, low PE isn't all it's cracked up to be. The stock will be marked down to that low PE if its growth prospects aren't great. And then you have to draw the line and say, why am I buying a stock whose growth prospects aren't great? Well, there's no free lunches in the market. The stock is cheap because those earnings are expected to decline. But there is a price for everything. That's the other message. And what is the right price? And we can see we've paid way more than this in the past for S32. We've also paid less. Okay, what's the right price for this? Look, it's probably about right there. I can't see any reason to doubt that strongly. Okay, the brokers aren't using that, but it's not something I'm necessarily going to be chasing real hard based upon the valuation. 8.7 looks quite low in the whole scheme of things. I could go dynamic total, and that'll look at everything. All right, so that'll look at everything, all the historical, all the future, and we're starting to get closer and closer to where it is. But yeah, without having to mark this up, so you can, and what I can do now is go target here and show you what the brokers think. So basically, I just need to find a number in here that matches 508 on the price, and that would bring it fair. So fair value would be 12, 14. Where are they? I mean, they're what are they? 13.8. a little bit less, 13.5, a little bit more, 13.7. So what I've done is I've pretty much matched that. So the brokers are using 13.7, which I don't know. I don't know if I'm there. I don't know if I'm there. So look, again, I'm going to give you my view. I'm not seeing South32 as a screaming buy, okay? But I'm not going to doubt the brokers either, okay? Using that high PE for something whose earnings are expected to decline. Let's head back to the charts by clicking that button there and going to DMP. This one's for Nicola. Look, last couple of times we looked at this, I'd say it was probably heading down. We said, don't touch it yet, wait for it to turn around. Last time we looked at it, it had started to turn around. And I probably said, look, it's looking half interesting, but I'm just not ready yet. And the ready, you can probably see why I drew that supply zone there. So you can see this one here. Let's turn that across. It's hit that zone, it's pulled back. Could it fall back into, Nicola, could it fall back into this sort of a pattern through here? I don't know. It's possible that it falls back into lower peaks and lower troughs. It's not looking great right now. Will it blast through and turn this area here into dynamic support? Look, that's also possible, but I'd be foolish to guess at this stage. So I'm going to say, Nicola, look, I require a bit more information here on the chart. You can see the long-term trend and the short-term trend are literally neutral because they're both orange, right? So who am I to make a decision when clearly the market is incapable of making one? But hey, if it starts to make high peaks and high troughs with the demand side candles, yeah, look, I think you can pick some up because at some stage this is going to be a really good turnaround play. If we see the supply side candles come in, they're the black ones, the upper shadow, starts to make lower peaks and lower troughs, it's just not ready yet, and just leave it alone. That would be my opinion. So if I had to give this a score out of 10, maybe it's a 4.5. You know, it's not terrible, but I'm not sure if it's breaking above 5 out of 10 just yet. Okay, let us head over here because look, I'm a little bit curious as well, and have a look at DMP. And I'll try and do these as quickly as possible now because I think we've got the gist of how these the charts and the valuation spreadsheet work. 14 estimates on system. I said I was going to the streamers next. I'm so sorry, streamers. I'm coming to you next, I promise. Let me find the window where you exist. There you are. I found you. Okay, next. High target 90, low target 60. Okay, for a stock that not that long ago was over 150 bucks. How about that? So that has come down. We're roughly fair value for looking at the average. 1 buy, 5 buys, 6 holds, 1 sell, 1 strong sell. Now, I reckon, and somebody can correct me if I'm wrong, but on the way up, I reckon that was unanimously buys. So, geez, they've changed their tune on that, albeit a little bit late, the brokers. EPS line here, we can see the build up in earnings and then the decline in earnings, and that's what the market didn't like, but, you know, not that much. I mean, at 185, it's still well above, 5 years ago. And then we're going to see, according to the brokers, these are not my numbers, this is what they're expecting, some massive, massive growth coming back into Domino's to the point where we've actually got 23% compound annual growth rate out to FY26, which is a monster. And that's solid growth. I look at that, I get quite excited. That's very attractive growth if they can pull it off. What is the risk that they can pull it off? I don't know what's going on with inflation. If I left that at low because Domino's is so defensive, it's such a great company and there's no reason to doubt its credentials, you'll see, and we will change this back to what the brokers think, which is dynamic F for future. It's looking crazy cheap, right? So this is no longer in play. It's looking crazy cheap at a P of 28.1. Okay, but we can see now if I change it to moderate, what we're doing is we're changing the rate at which we discount back those future cash flows, and all brokers have a spreadsheet just like mine where they can do that, and that cell has a huge difference, right? We're changing the risk level. So if you think inflation is going to be a problem, labor costs are going to be a problem, you might want to work off that, which still says it's pretty cheap and actually gets us pretty close to where the brokers are thinking, just, well, within 10% anyway. The big question is, would you pay 28.1 times earnings for Domino's? Would I? Well, to do that, I look at what I've paid in the past or what the market's paid in the past. The market has paid way more than that. In fact, at 28.1, it is well below the 5-year range of PE, which means that's a very high hurdle rate. So obviously, the lower the PE target, the higher the hurdle rate you're applying to this company, and that is really being very conservative. So I don't see any reason to doubt the median forecast. PE. I don't see any reason to doubt that. If anything, I could probably pay a little bit more for Domino's, and given the growth, I'm really comfortable. I'm going to go moderate just to cover my backside and say that my price target on Domino's is $80.16 to the exact cent. How about that? I love it when brokers have price targets to the exact cent. I just think it's so silly. But my price target is $80.16. So yeah, look, the way we look at that analysis is we say Domino's is probably something I want to buy at some stage when the chart starts to look better. So keep it on the watch list. Don't hate it. I don't hate it. Let's go to King now. I know I'm going to the streamers. Sorry, streamers. Josh, can I have your opinion on PAR? Hasn't done a whole lot, Josh, probably since the last time you asked me about it, but I'm glad you asked me again. Look, I drew this in. Maybe it was last Tuesday, but if I hover on that, it's probably going to tell me it was the 14th, which is our last session 7 days ago. And I drew this in, Josh, saying, hey, if it starts to do this price action, then we could add a third to a risk to the position. And it simply hasn't done that. And I'm just really just going to reiterate what I said last week is if it starts to do the right price action with the right candles, then you can add a third. It hasn't done it. I don't see any reason to change our view on it. And therefore, I think my view previously based upon trends would have been hold it. That link is somewhat tenuous now. It's not shooting the lights out. Maybe this is a 5.5 out of 10 order of magnitude, but it could get very good very quickly if it does the right things, because I do like the base pattern and the trends are half decent. Okay, we just need to see the price action, the candles come in. So I'm going to go or reiterate what I said, but pass on that for now. Okay, in terms of the buy, hold, sell, and just because he's been so patiently waiting. Hastings Technology Metals, Josh, I don't like this one at all. And I know when I say this, sometimes the price goes straight back up again, but I can't see evidence to suggest that the people who have the shares want to hold on to those shares greatly. Like they are just clinging onto these. I will not sell my Hastings Technology Metal shares because Hastings Technology Metals is the best company in the world. I'm never going to sell these things. You know what? People are going, you know what? I actually don't care. I think, you know what? There's so much other stuff out there that I could do with my money right now. Looking through my list of portfolio, this one, you look through your portfolio list and there's always that 1 or 2 stocks where you just go, like this thing never freaking goes up. I'm out. I just can't take it anymore. I'm out of there. And this, look at this. That's Hastings in a nutshell. So supply, they've got no great love affair with this, and demand is not falling over itself to get in. So who am I to argue with literally everybody else in the market? I'm a pass on that. I think in fact, I can't see any reason to own that one, to be honest. I should also check all the messages here. Nick's chatting away to people, which is great. So you can chat to Nick. He's on the chat window. He's from ThinkMarkets, and he can help you out with any platform questions you have or any questions about opening an account. Let's get on to some of the other streamers here. This one's from Ira. Hello, Ira. May I please ask your view on QGL? You certainly can. QGL looks okay. Quantum Graphite. I'm going to go back to my normal zooms. I want to see more. I want to see how this trend is building up. I'm a little bit concerned, Ira, because if I look at the price action, we've gone from higher peaks and higher troughs, everything's good hunky-dory, to breaking through that trough there, important. And it's starting to pick up a little bit. It's just gone a bit ho-hum, unfortunately. I don't think I'm going to get a really definitive answer here on the technicals. Okay, so when we break through here, that's not good. And then when we can't get back above it, that's not good. And we've kind of been resisted in that area. Look, I can squeak in at a hold, but I'm really concerned about it. Really, really concerned about it, that it is losing momentum. And it might become a Hastings for all we know. Let's hope not. I would say that your last line of support is that low there, 50 cents. If it closes beneath 50 cents, I think it's in big trouble to have a very long time of not doing a whole lot. I think the interest in this one is diminishing. We can even see here that the volume is coming down, and you probably know that feeling. It's just not on the chat rooms anymore. It's just not exciting people anymore. I can squeak in at a hole, but even then, that's being a real optimist on that one. And I'm only going on what the market's saying about this one. It could be so much better in terms of its trends. Short-term trend is down now. In terms of its price action, in terms of its candles as well. Okay, let us do a couple more of these because there's some interesting ones in here. ARU, Arafura rare earths option. Oh, that's interesting. It's going up, so I'm sure ARU is going up, which I will find very, very soon. ARU, where are you? Okay, I'm going to go here. I don't know why I can see the option and not the actual company. There we go, found it. Ah, brilliant. Ha! The stairway to heaven. What a wonderful looking chart. I'm going to reiterate whatever I said last time on this. There's nothing to do here. I've got no reason to sell this one. I'm a continuous holder. hang in there. Why would you sell a stock that looks that good? Now, this candle is still live. Anything can happen, but it does appear to be closing above that last point of, well, it's going to be at its highest close ever. Maybe it needs a little bit do a little bit more to get above the last point of supply, but geez, it's very close to it. So very, very good. No complaints. I don't think I need to say anything more about that. Very, very happy holder. Could you buy it if you don't have it? I can't see any reason based upon that candle closing where it is or better why you wouldn't add some risk here. So I will write on screen officially for when we come back next time, plus 1/3. No fears on doing that, assuming the candle closes there. Thanks for that, Glenn. What do I think about Liontown? For Tim, look, you can see, Tim, we go back here and we can see all sorts of 1/3s down here. I would have only said 1/3 plus 1/3. I can guarantee if it did the price action, it didn't do that. In fact, it fell straight back through there. And there's really nothing inspiring here to tell me that there's a huge groundswell of demand trying to buy this dip, nor that there's really limited supply in there. Understanding that, hey, this thing is just too cheap right now. And Tim, you might think it's really, really cheap because you've done the research on it, but I suggest to you there's a bunch of other people out there with more money than you and probably more access to the fundamentals who are suggesting it's not that cheap at all. If I had to give it a score out of 10, we're probably sub 5, I think, on this one, and it has very, very few redeeming features. The only let's talk in redeeming features. It's because it might get a 4 out of 5. Look, it seems to be holding that level. Beneath that, I think it's all over probably for a very long time. And Tim, don't forget, we do know that those lithium commodity prices are rolling over, and it's no surprise they've been rolling over for months now, and I've been trying to draw the Australian investing public's attention to the fact that they've been rolling over for a long time now, and try to help people understand also that just once you've seen so many cycles, you just know that it doesn't take a huge move here to create an outsized move elsewhere when that sector last year was just so hot, and then you're going to have all of these people just holding on all the way back down again. Lithium hydroxide futures haven't rolled over yet, but that one certainly has. So yeah, look, I'm not a big fan of the lithium space. I've been saying that for weeks now, and I can't see anything in the charts yet to suggest that you can jump back in if that's you, or that you should hold on if you're wondering what to do if you're really in. And just for completeness, let me just have a quick run through. So let's go through. We did Arafura. AGY is the one I've said in the past is still my favorite. It's still okay today. It's still okay, but we don't want to see it get below that green zone. We don't want to see the supply side candles dominate. Okay, so just keep an eye on that. That one's still okay. AKE, Allkem, it didn't do this at the long-term trend based upon what we said. You can see we've got 1/3, 1/3, 1/3. No reason for me to switch that around and start to add risk again. You need to see this price action. You need to see this price action occur before you would add risk. So, even today's rally, there's not enough in it there for me to call that a buy. Call lithium. I know it's just such a favorite. Look at this. I called it last light of demand. It has bounced from there, to be fair, but after closing beneath it again. Now, I totally concede. That they can do this. I totally concede they can do that from here. I just don't know. Right, because I can't see the future. But what I'm trying to put to you is the probabilities of that sort of recovery are so slim because of the evidence in the market to the contrary. Don't ask yourself what you think about the company. Ask the market what the market thinks. And if the market likes it, it'll be going up. Look at that Arafura chart. Okay. So let us keep moving. I've done Liontown. Let's do Pilbara. I'll do IGO now. Well, that's Piedmont Lithium because I just typed in the wrong thing. That actually, a big drop there. It actually was looking half decent, probably the pick of the bunch. We get to Pilbara. Could it bounce off here? Possibly. You're running at most 2/3 of your position right now because you would have gotten out 1/3 based upon my suggestion last week. And I see no reason to be adding risk at this stage. In fact, you're probably getting more and more cautious to losing another third. And I'll give you a level. That low there is 410. So if you do see a close beneath 410, my suggestion, and again, you have to do whatever you think is right, but I would say beneath there, you would be looking to go another minus 1/3 on this. And I know it's blasphemy for some because apparently people think that Pilbara is the best company in the world. IGO, that you can see the minus 1/3 all over my analysis here, and I can't see any reason not to persist with that. Mineral Resources is interesting. Okay, so we haven't, well, look at this. We said minus 1/3 up here. I didn't quite get there. I'm not saying you would have done it, but through here, minus 1/3 on a break beneath this line. So you would have probably done that yesterday or the day before. And I can't see any reason not to continue to be cautious here. And potentially also you might get a little rally into here, but then the next breakdown through here, I would suggest, it's just a suggestion, minus 1/3 and start to be dealing out of some of these trades. So that, let's say, because I can't think of another one, SYA, nothing to see here either. I can't think of any more, so let's call that our lithium sector review and keep moving. Thoughts on the BHP? Okay, yep, that's a valid one. Let's have a look at this one. On it rolling over, I did say when it got to $50, I said it on the call and all sorts of places. I was all over the place saying, hey, look, this don't overthink this, okay? Don't overthink it. $50, big round number, minus 1/3, okay? And that's all I said. I didn't say sell all your BHP because I don't think you need to, but just be aware that, you know, scheme of things, it's had a good run, and that's probably a sensible thing to do. Now, I'm a little bit concerned by the way it hasn't come back up here and it's breaking through there, and it's almost, depending on today's close, I'm going to really say the risky here is another 1/3 on that one. And then I think you can just comfortably hold on to the final 1/3 on the basis of that. So until it starts to break through this here and starts to do some really horrible stuff, probably just holding the 1/3. And that's you for BHP for a while, I'd suggest. And I think you'd be pretty happy with that, you know, adding risk sort of down here when it started to turn back up, taking some risk off the table towards the high of the range, and just, you know what, see how it goes. If it starts to do the right thing again, we could always add risk back in for the move from 50 to 100, okay? But let it do that work before we start to do that. Okay, I'm going to switch back to the chat window here because I know we've got so many questions today. Let us pick up the pace. Let me go here. Now, we've got a few here from in the chat window, so I better do some of yours. EVN, this one is for Harry. And sorry if I haven't got to yours yet. I'll do my best. We've got about 15 minutes left. Evolution Mining, I did say, I know I say that a lot. I did say, oh, you're such a genius, Carl. I did say, go bloody check the tapes. I did say, I wouldn't say it if I didn't say it. You know what I mean? I did say, here's gold. I did say, literally after that candle, start to trim your Aussie gold holdings, okay? Let us get back to here now, okay? Because that candle on gold was not a good one, okay? And there you go, it was here, okay? So I don't know. It's up to you what you do, as always, but you can see how trends change, because up to that point, things were pretty hunky-dory, weren't they? But then we go through this process of trend change, and it is the same process for any company, any FX, any crypto, because all of them are just driven by supply and demand, ladies and gentlemen, and that's why technical analysis works. Well, good technical analysis, that is. So we were kind of okay in the price action. This is the big supply event. Do not pass go. Do not collect $200. Trim. Right? Pretty simple stuff. I've taught you to do that about 1,000 million times. And then after that big supply event, we are super attentive. Much like, I can't remember what the one was before. I said, look, we're going to be alert, right? But well, don't take that exclamation mark off. Alert, not alarmed, right? But we are on alert for a change in the demand supply dynamics. And remember, you know nothing. I'm sorry. I know your mum told you that you're a delicate, special snowflake. I know your mum said, hey, Johnny, hey, Cindy, you're amazing. You're wonderful. You're so intelligent. You're going to do amazing things with your life. And don't let anybody tell you otherwise, because they're nasty, horrible people. Okay, look, your mum was right. Don't get me wrong. When it comes to life, you are beautiful. You are a delicate snowflake. But ladies and gentlemen, I'm sorry to be the bearer of bad news. When it comes to the markets, you're dirt, you're mud, you're scum, you're nothing. That sounds pretty nasty. And if anybody's watching on the video on demand, and if you've just tuned into that bit, you're getting the wrong idea. I have to be nasty, all right? I've got to be cruel to be kind. You have to understand, when it comes to the market, you know nada, okay? Stop trying to think you know something about something you don't know anything about, and just bloody well trust what the market's telling you to do, okay? And if you see these points of supply building, POS, and then a move beneath the pod, right? And then the short-term trend changing, right, to amber, or at least starting to converge. You can see that even before it goes to amber, it converges, but then it goes to amber, right? You know, traffic light system, black candles. Get the message, ladies and gentlemen. That's all I can say. Where to an evolution? I can't see any reason right now to hold great hope that this is going up. I think you're still trimming. I think you're still getting out. And I would suggest there's a low there. That low is 282. Beneath that, it's kind of final 1/3 stuff, isn't it? Minus 1/3 stuff there, because beneath this POS, told you this 1,000 million times, beneath that POS, right, that's minus 1/3 through here, minus 1/3, and this is the compulsory minus 1/3 supply event when you see it. Okay, so really, I can't see any reason why you'd still be in this one. Even through here, like once you made a little trough here and you broke that one with that candle, like why are you still there? What are you waiting for? What are you hoping for? Why are you living in hope that the market's going to turn around and do what you want it to do? Harsh words, but necessary words. Harry, he had EVN/gold, so I think I did the gold thing as well. Hey, gold might go back up. I don't know. All I can see is what the supply and demand is telling me. Let's keep moving. Where am I going to go? Go here. I'm going to go here. I'm going to go here. Let's go to Karoon for John. Still looks okay, John, but let's start to get the message. Things aren't all hunky-dory here either, okay? And because this is compressed into such a tight range, I think you can give it a little bit more leeway. So what I mean by that is, like, you've got a clear bunch of troughs, so you might not necessarily go, well, that's the killer, right? So but beneath this pod here, that's the death knell, because it's sensible to maybe use those pods. Okay, but certainly, I think if we're closing beneath, I'll give you a number, that low there, 207, this thing's starting to look very shaky. And beneath that 207, it's really going to start to be challenging, that trend line as well. And yeah, I think I'm getting a bit bored with Karoon and a bit fatigued in terms of waiting for it to fulfill its promise of breaking through that 240, 250 level. So I'm going to go alert, not alarmed, but super alert on that one, John. Next one is for Shireen JDO. Ooh, that looks interesting. Judo Capital. I like it. I think it needs to do some more work though. It's very close. Got me thinking this one. It's because, look, obviously the long-term downtrend is, it's been brutal, but we are testing, we are moving, we're trying to do a dominoes here, aren't we? We're trying to break through. The candle today is not that convincing on the breakout, but it's one I'd keep an eye on. I'd keep an eye on it. And again, find the demand side buddies in there, Shireen. You know the ones, the white candles, lower shadows. Find the price action moving to peaks and troughs. I think you can get it. Is this going to be the best thing you're going to find on any day? I don't know, because what about this, Shireen? What about that level there? Aren't you worried about that? I think there will be supply there. Not a lot of volume coming in, really, to say that this thing's turning the corner. It's a bit sketchy on the price action, very overlapping. We talked about overlapping price action, and the candles kind of can't make up their mind. There's still quite a few black candles in there. So I think I'm talking myself out of this one. First glance, oh, well, I turn around play, I get excited. And then I sort of really, get out the microscope and look a bit deeper. And yes, demand appears to be sort of grappling control from supply, but I don't think it's doing it in a definitive way, and certainly not definitive enough to drag any risk out of me onto that one. This one from Anonymous CTT. Oh, that one's turned the corner as well. And again, watch out, ladies and gentlemen, for these big black candles that engulf other big black candles or demand side candles as well, because they are, again, the do not pass go, do not collect $200, supply side, species ending events. And then here's the other thing. And I know I've been positive on this one in the past, don't get me wrong, but you have to continue to do the work. Don't just wait for me to tune in and then cover it, right? You have to be out there doing the work. So this is all fine through here, okay? Obviously, we've got a supply side candle in here, but not enough for me to change my view. Look, it's not great, but no, I wouldn't have flinched on that one. I wouldn't have flinched on that one. That's starting to get me concerned. This is worrying the hell out of me, okay? Once I see that, I change my mode. I change my mode from adding risk on this one to now working my way out of this one, okay? Should it continue to do the wrong thing. And then, because we've got this peak, and look what it did. It gave you that lower peak. It's the exact same pattern I just showed you before, right? This is all template stuff. This is all check box system stuff. There's your POS. There's your lower POS indicating supply is building now. And once you crack beneath that pod, and look how you did it as well with the nastiness of that candle, I really can't see how you could not go minus 1/3 there. And the most you would have on this trade right now is plus 1/3. And when I do these plus 1/3s around that level, I'm not saying that that's where we're going to buy. Please understand that. I'm saying that that's all you've got left, yeah, on the basis of that long-term trend. And even then, that is a very tenuous link on that one. Let us keep moving. I know I'm not doing the valuations, I'm sorry, but I've just got so many questions, so many suggestions here from people. Let's go to Hanelli. Let's do Sonic Healthcare, and I'll get some streamers next. Sonic Healthcare, look, it's a great big move up, Hanelli. So that's a big tick in my book. All it does though is it changes it from what was looking horrible, don't want to own it, to I might want to own it in the not too distant future. So I'll do this one very quickly, Hanelli, because I don't think I want to buy it today. But certainly if it starts to do this sort of stuff, that's when I'm going to get interested in it. And if I am seeing those demand side candles, the fingerprints of demand coming in there, I could well entertain it. But I think we're a little bit like the JDO, Shireen's one, where you say, well, if we look up, yes, something's good. We've seen a major change here. So this candle here, much like the big black ones with a species ending event, this is the big catalyst, all right? So this is important, okay? This is important here. Okay, you cannot ignore that. Much like you couldn't ignore the last one there, it says CTT, much like you couldn't ignore that big black one, you also cannot ignore this one. Okay, something's up. There's been a major shift in the way the market is thinking about this. But does that mean we're going to rush out and buy it? For me, no, it's too early. I need to see some evidence the trend is changing. We need to see evidence really that this long-term trend zone, which let's face it, is the terminator. It's been the terminator of so many rallies in the past. We need to see that it is actually now starting to offer dynamic support. Okay, and I'm a very patient person. Until then, it's a pass for me. But hey, if you've got it, finally, there's some light at the end of the tunnel for you in Sonic Healthcare. Okay, let's go to some of the streamers now. From LE555, Woodside and Fortescue. Well, they're biggies. Let's have a look at Woodside. I'm going to go ditto on what I said about Karoon. I'm losing the faith on Woodside. I know I've been a supporter in the past, but you can see how the price action is changing. And as the price action changes, my opinion changes. Okay, I'm never stuck with one opinion forever. That's impossible because charts don't stay the same forever, because supply and demand doesn't stay the same. Why doesn't supply and demand stay the same, ladies and gentlemen? Because I will flick back here, because earnings don't stay the same. Earnings go up, they go down, okay? And the brokers don't muck around. They are ruthless for their clients. So if earnings are changing, earnings expectations are changing, the supply and demand will change and the price will change as well. Look, it's still holding the long-term uptrend, and the long-term uptrend has shown plenty of evidence of supporting price in the past. I don't think you'd be holding a full position here, because I think if you'd been following my methodologies, you would have found a reason. And that's really all we need, isn't it? Sometimes the hardest thing to do is to have that catalyst, that stimulant to make us get off our backsides and do something that we've been reluctant to do because we've fallen in love with the company, or we're not making a huge amount of money on it and we want to make more. And we go, oh, if I get out now, I'm only making this much, or if I get out now, I'm losing this much. Sometimes we need that kick in the pants to go and act. And if it is a chart, if it is seeing something like this moving down through here, and the great thing about my model is you don't have to be all in and all out. So if you sell a third here on the, you can afford to be flipping. Yeah, man, I don't care. Bang, 1/3 out. Take that, Woodside. Do your worst. And then Woodside says, ha ha, woo, hee, here we go. Well, told you shouldn't have sold a third. Well, you've still got 2/3. Yeah, take that, Woodside. I don't care if you go up. I've still got 2/3, you buddy. And I could always buy some more if I want to. Okay, but if it does keep going down, you go, well, look, at least I sold a third. It's not so bad. You're not feeling so bad about this trade anymore. You're more likely then to start to do the right thing and get out if you need to. And there's other signals here that you could have been doing that again. So, look, I reckon you might be only just holding a maximum of 1/3 here on Woodside. That would be my idea of how to play this one. And then if it does break beneath that level there, that's where your minus final third is out, saying, hey, you know what? If I had Woodside for a while, it's been a good trade, and we're moving on to find something else. I hope it rallies from here. And it's all good. Okay, but if it isn't, you've got a strategic plan of attack to get you out. Okay, Weebit we've done from Andrew. Andrew, if you might have tuned in late, but it'll be at the start of the recording. Go catch that. LE555. So BHP figures were always going to disappoint after the loss of oil and gas. Possibly, quite possibly so. Wise words, no doubt. From a bull sheet, BULL space SHEET, that's the handle here. Good day, ESK, please. Let's do that one, only because that is the best handle I've seen today. Etherstack, I'm guessing moving on the back of Ethereum. I'd just go, and I'm sorry if I've completely got that wrong as to what these guys do. But if it is Ethereum, I'd just go buy Ethereum. I think it would be the best way to play it. And you can do that with the ThinkMarkets CFD. Okay, we have a bunch of crypto CFDs, Ethereum being one of them. That would be the way I trade it. If you think Ethereum is going up, I do think Ethereum is going up, by the way. I don't know, I have a current, I don't think I've downloaded my data for my crypto today, so I won't have a current chart, but it will be up to date as of yesterday. And I do think we're going to see a little push here into 2000. And I own Ethereum, by the way, so I do think it's going up. I'd do that. So apologies, bullshit, if I've got it wrong what they do, but I suspect I'm not. So I'd say it's too sketchy. It's too illiquid. Just go buy Ethereum. Great, Adam Dawes, old Dawsy. I know Adam quite well. We do a bunch of stuff via Ausbiz. Reckons Treasury Wines is a buy. Well, who am I to argue with the great Adam Dawes? Let's have a look. I don't think it's a buy. It's getting closer to a sell. That would be my view. Okay, and it's very much like the one we did recently. What was the one we just did? And it was in Woodside. It was just like Woodside. My brain goes blank after every one I do. In that the trend is, I think we're seeing signs the trend is changing. And what I'm really concerned about is that, and then today's candle. If today's candle closes down here, this is me. I'm going to go minus 1/3. Now, Adam's, he's got a very different methodology to me. I'm not saying one's right or one's wrong. He's more value-based. So he's going to look at the valuation, not the chart. He's longer term. He's got a 5-year view. I'm sort of a 5-month view. So I'm not here to say one methodology of looking at the market is better than the other. I think that is arrogant, and I would never do that, because that's what makes a market, and that's what's beautiful about the market. Everybody gets to have their say, and I really, really love that about the market. But my say, for what it's worth, is I think supply is building, and those two candles are really, really detrimental to this idea that the long-term investors are still willing to put up with this one. So I'm going to go 1/3 as a precaution. Remember, we talked about even this just precautionary exit, and you could have even done it beneath there, to be fair. And I would say if it closes beneath that low there at 13.24, that's where I would, again, you do whatever you need to do, but that's when I would go the minus 1/3 on the next one. And then I can't see any reason to still be in beneath, say, that level there. Okay, but happy to give it the benefit of the doubt on the basis that that long-term trend is still fine for the time being. Let us do we're just pretty close to time. I'm going to do 3 more. Okay, so I'll pick one from the chat, pick one from the Q&A, and then I'll pick another one from the YouTube stream. I've done Judo. Let's do Pete. I think I've done one for you already. Let's try and find somebody who hasn't had a question. Glenn, PLS. I've done Pilbara Minerals already, Glenn, in my lithium sector review. Vanessa, hello, Vanessa, welcome. I'm pretty sure I haven't done one for you. I've done Cettire for you, though. ABB, let's do that one. Look, last time I said, hold it if you got it. Okay. And I'm going to say the same, hold it if you got it, because we are seeing some signs that the trend is turning the corner. The long-term trend zone is going through my traffic light system, amber, and that's how trends start. Let's go back and we'll show you more data. Oh, it's Aussie Broadband. So it hasn't been around long enough for me to be able to show you orange to green. Okay, just kind of started here. But we can see, when the trend is green, that's the best place to be, and it has to go through the amber phase to get there. Okay, so it's starting to do that. The peaks and troughs aren't great. That's my only concern, is that we are seeing lower peaks, probably steady troughs, but lower peaks. And I'm going to say, look, if it cracks beneath here, that low there's 292. I'm going to take a precautionary measure here. And what does it tell you, ladies and gentlemen, when Carl keeps saying, I'm going to take a precautionary measure, I'm going to take a precautionary measure, I'm going to take a precautionary measure, even on some of what have been the greatest bull trends through the last 18 months, what does that say about the market if so many of these companies are causing you to take precautionary measures, not getting out of everything, but starting to trim? That's interesting. Short-term trend is still up, so happy to give it the benefit of the doubt, but bit concerned if it gets beneath that low there, which I said was 292. Okay, I can hold it, but I'm not giving a glowing endorsement here. It's not the best one I've seen. So that is one from the chat. Let's do one from the Zoom quick Q&A, which is James Hardie, which has had a great rally on the back of just this short covering from the end of the world scenario, which we're seeing through late October, November. Oh gosh, I wish I didn't pick this one, Hanelli, because I don't know. I've got no idea. The price action in the candles almost don't make any sense to me, because look how amazing, like, wow, this is strong demand through here. But this is such a solid trend. Let's just say, look, I'm not a buyer. I've told you what you need to see, the right price action, the right candles to become a buyer. Maybe it's a bit more in that Sonic Healthcare camp, so review what I said about that. So it's not yet, but I'll keep an eye on it. Can you hold it if you've got it? I think there's enough in it to hold it, but I don't think I'm going to be a buyer on that one. Okay, let's go back to the streamers, and well, I don't think I have. I think I've done all the streamers, to be honest. We don't need to do any more there. I'll do one more in the promise of me doing 3. Let's do Clinuvel here for, I don't know who that is, but it might be Peter. Camille, sorry, Camille, Clinuvel, CUV. Oh gosh, what happened here? Okay, so Camille, there's your species ending event. When you see that, for me, it's don't ask any questions. Okay, and then, I'm a broken record, aren't I? Keep saying the same thing, but that's not a bad thing. Look, I can't be here with you holding your hand every day of the week, unfortunately, but what I can do is give you enough information to make your own informed, independent decisions when I'm not around. So I'm sure the last time we saw this, I was saying Stairway to Heaven looks great, and it was, and I can't see. There is a wall. Let's say this is the day that I said Stairway to Heaven, okay? I hope Amy Broker keeps up with me. Maybe that day there. Okay, let's say that was the day, and it looked amazing. And I said, I can't see any reason to sell it, because I can't see any reason to sell it. Okay, I don't know what's going to happen next. There's a wall in front of me that I can't see past. I can't see that, but I've given you the knowledge to say when you see that, it should stimulate a response. It should be a catalyst for not indecision and uncertainty, not what should I do now? I don't know what to do now, like everybody else out there. And that sucks. I've been in that boat. Market's moving. I don't know what to do now. I hate that feeling. Okay, when you see that, I can't see why you wouldn't do that. And then when you start to see, so that's your first instance, and then you start to see these POSs build, right? Even that's so big, you're probably doing more than a third. But certainly when you get beneath this level here, okay, it's a minus a third. Okay, and then, you know, maybe you're holding a third right now, but even then, I doubt it. Such as the severity of these. So you've heard me in the past call these species ending events, and I challenge you to go back and do the research and prove it to yourself that when you see these candles, you don't get a rapid, instant response back to the upside, because they are there for a very good reason. And we are here for a very good reason as well at ThinkMarkets. This segue is taking way too long, mind you. Let me go to here. I'm going to be back for a very good reason on Thursday at 1 p.m. for the Indices, Commodities, Foreign Exchange and Crypto edition of Live Market Analysis. Get out there in the world, see the world, everybody. There's more to trade than just ASX shares. That's 1 p.m. on Thursday. And then at 12 p.m. on Friday, I'm going to do the USA edition. We'll be talking about weird and wonderful stocks like Apple, Tesla, Microsoft, Amazon, and Google. I challenge you to broaden your horizons. Head to www.thinkmarkets.com/AU webinars to register for any of those. And then if you are not a client of ThinkMarkets, you really should be, because we are the good guys in the Australian broking business. Everything you need for your self-managed super fund, all the big shares and ETFs, $8 flat rate per trade. Hey, you might find a cheaper headline rate, but you will not get share sponsorship and the support we give you, along with our incredible trading platforms as well. If you want to trade CFDs, you can trade them commission free, save some money there. 4,000 CFDs on FX, indices, commodities, futures, cryptos, and shares. As I said, the best service in the business. I do shadow shop other brokers, and I can tell you the number of times I've had to wait days for a response to chat requests and get phone calls from numbers in Brazil. I'm not going to answer that. And then they leave you a message. It doesn't happen with us. You can call us, you can speak to us, and we're going to look after you. There is a difference, and it is worth it. It's www.thinkmarkets.com/au. If you like what you saw today, hit the subscribe button on any of those streaming platforms to stay notified of any future updates that I put out, and hit the like button to let me know you like what I'm doing, so I continue to do more of it. Apart from that, it has been a pleasure chatting with you today. All the best for your trading and investing until we catch up again. Before I leave you, of course, there's the disclaimer. Take your time, read it. If you've got any questions, give us a call or download our product disclosure statement from our website. The important thing is that everything we've discussed today is general in nature, has not taken into account your personal financial objectives or particular needs. So please consult the help of a financial professional before you make any decisions about your money.